Good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. For those of you new to our trading room, welcome. I'll give you a real quick overview of what you're looking at here. This is the diversified trading system, and it's diversified because we're looking at the market from three different points of view. Here in the top left, we have the Hawk Micro Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. The bottom right is the latest addition to the DTS family. This one is called the Raptor. It actually incorporates elements of all three birds. It has elements of the Scalper, the Swing Trader, and the Trend Trader all blended into one. The charts you're looking at here are the NASDAQ. I'm also following crude oil and soybeans this morning, but I would be happy to take a look at any market which is of interest to you, so don't be shy. All right, we just had the market open, and let's take a look here at where we've been and where we're going. Hold on just 1 second. Okay, so why don't we start here with the Raptor. And I'll throw an extra contract on there. Okay, so with the Raptor, let's see. So the session finished off, where did we finish yesterday? Oh, way down here actually. So we finished off the day around 42.80, give or take. Kind of quiet through the Asian session, and then we hit the European session right about here. A little bit of a rally through the European session, and the market waffled a little bit, and this is where we're at. So it's going to look like a little bit of an opening gap to the traders this morning. We'll see whether or not they try to get into that gap. Right now things pretty bullish though. Oh, we did just generate a first micro-macro cross signal on the Hawk. That's this signal right here, the first micro-macro cross. A very high probability signal. Let's see if we found our profit target. I probably would have set it up like that. Yep. Just hit our high probability profit target. And now we're seeing a little bit of a reversal, which is not that unusual. I'm going to point out some add-ons to you as the day goes on also, and I'll provide you with a link where you can find more information about these tools as well. Okay, so just waiting for the dust to settle a little bit. Let's see here. We're getting also a trend change signal here. Why is my Falcon stalled? Yeah, 43.12. Why is my Falcon not loading? All right, let's try that. Well, that's bizarre. I had a ton of static while that was going on, while I was trying to reload that. I've never had that happen before. Well, this trend change signal here, by the way, that's a pretty good trend change signal on the Falcon, but obviously we're not looking to trade that one just yet. Okay, so I just forced the charts to reload here. We'll give those a moment. And if that doesn't do it, well, I'll have to build a new Falcon chart, which isn't the end of the world. There we go, that's better. These little blue dots that you see here on the Falcon, these are part of the trailing stop strategies, which are part of the Trade Manager, this tool that you see here on the right-hand side. We actually have 16 different stop strategies to choose from, and they're all customizable. And as you'll see, these stop strategies are automated. So when we end up taking a trade, we don't need to worry about managing our stops. We can actually let the system manage our trade for us, and we can look elsewhere for another trading opportunity. Ooh, working on a late filter entry signal here. Okay, the late filter entry signal, a pretty high probability signal as far as the Falcon goes. What I'll do is I will set it up like so. Oh, and I promised I said I was going to get you some information about these add-ons as well, so hold on one second. I'll get you that right now. There you go. So I just put that into the chat window. If anybody needs or would like more information about these add-ons, you can get that information there. On the Falcon also, I have my support and resistance suite. That's those lines that you see right here. There's an assortment of 21 lines, support and resistance lines, which are forecast for this trading session. No, they're not Fibonacci levels. No, they're not pivot points. These generate from price action, actually. All right, so we're working on this late filter entry signal. Late filter entry signal occurs when the trend line does not change color, but the filter goes out of sync, comes back into sync. That's a pretty high probability signal. You can see we're generating another warning dot. I should point out for those of you new in the room that all signals develop the same way. First, we get a warning dot and an audio alert. And then when all the signal parameters are met, we get a triangle and a hash mark. That tells us that all the signal parameters are there and we're able to take that trade. All right, so I'll just let that marinate for a moment. And it looks like we're starting to pull away from that, so I'll cancel that order. And now we're back into yellow bars. Okay, possible trend change signals starting to develop here on the Falcon. When our trend line changes color, then we look for a typical test retest type thing. So This is the move that has changed the trend line color. Now we're going to look for the sellers to try to fight the market back, and we're going to look for the buyers to take control, give us a buy signal, and that will be our buy signal to take this market a little bit higher. I was actually kind of bullish on the NQ today. If you look at a daily chart, you'll see that our resistance should be sitting somewhere around the 43.50 area. So we haven't traded that high yet, I don't think. Did we get that high in the overnight? No. So here on the Eagle Trend Trader, speaking of system add-ons, we have this little tool up here. This is called the Trade Forecaster. This is also like the support and resistance suite and all the other add-ons that you're going to see today. These are work on any chart, not just the DTS charts. So you can use that regardless of whether you're using a time-based trading system or ticks or whatever the case may be. And it says that at the moment we are in trend mode for about another 20 to 24 minutes, after which we're going to move into swing mode. So it looks like things are going to perhaps get a little choppier as the session goes. Working on a hard edge bounce. We're still against the ATR. So if you want to be more aggressive on this one, I think we're going to eventually see it recover back here to the lows. Normally we wait for it to flip over the ATR. That's going to kind of pinch the profit target a little bit, but it should be enough in there that you could get that trade to a break-even position. But you can see we're getting a little bit of conflicting information. Now we're getting a trend change signal on the Falcon. This is what we encountered the other day, and it just kind of made trading a little bit more difficult. Sometimes the best thing to do is just wait. Just wait them out. Oh, thanks, Jim. Jim shooting me some advanced decline numbers here this morning. He says we got about almost 2,200 on the buy side and 465 on the sell. So that's about a positive 1,800. Overall, a little bit bullish. Jay is asking for a crude oil chart. Absolutely, Jay. 1 second here. While I load that up for you. Today, of course, crude inventory. All right, so let's start here with the Raptor. And I happen to have the support and resistance suite here on this particular chart. I forgot to load my Trailblazer. The Trailblazer is a one-click system. It's kind of the stripped-down trade manager. It does not have the risk component, but what it does is it enables you to enter the market with one click. You preset the quantity of your contracts as well as your profit targets for each. And you still have all these different stop strategies to choose from. What happened to my stop strategies? Let's reload that. There we go. That's better. This tool that you see right here, this is the Geiger counter. Again, one of these add-ons. Just real quick, the Geiger counter is essentially like a tape reader, and you get to see a visual interpretation of the time and sales. So you can see right here, big buying block going through. And very often when we see these spikes or these islands in the tape, it's suggestive of stop running. So we may see crude oil reverse here. And we just skewered by the primary resistance line from our support and resistance suite. So crude very likely to continue to hover somewhat until the inventory report. So that was crude oil on the Raptor. Just waiting for another signal to develop there. Let's take a look here at crude oil now on the Hawk. This is the Hawk micro scalper. And out of the open for crude oil was over here. We had a had a macro pullback signal to the downside. And we came right back with the first micro-macro cross signal to the upside. So a couple pretty juicy opportunities in crude oil already. You're going to notice the width of the bars are changing here. This is the dynamic equivolume bars. These are brand new. And an equivolume bar simply incorporates volume into the bar itself. So the wider bars have got more volume than the narrow bars. So you can quickly see where there's buying support, where the buyers and sellers are getting more active. And in other words, right down here, whenever you start to see the bars get wider, you can usually anticipate a turning point. And then here, the sellers got more active again, came down a little bit, buyers started buying it up. And here on the breakout, we had a pretty good breakout, a lot of volume accompanying the breakout above this high right here. So chances right now are looking pretty good for the buyers. They're throwing in a lot of buy support. So that's crude oil on the Hawk scalper. Here's crude oil now on the Falcon swing trader. Just generated a trend change signal. See, this is what we were waiting for on the NASDAQ. Here's this up. The trend line changes color. Here's the down that could only generate one bar lower. And then here comes the up with the buy signal. Let's see if I don't think we're to our profit target just yet. No, we're just shy of our profit objective. But we're through the primary resistance, so if the market tries to come back down, it'll probably try to find some support off of that level. Nice thing about the trade manager is this component right here. The risk manager prevents you from risking more than you can afford to lose. Right now, I have it set at 2% of my trading capital. So that means if I try to risk a trade way down here, it says, oh, sorry, Eric, you can't afford it. But, say I choose to go with the ATR stop strategy and I choose to risk it right there. It says, okay, Eric, you can afford to lose $330 if the trade goes poorly. And you can also afford to take 3 contracts. So it totally automates your trading. The best thing about this is that even when you do take a losing trade, you have never lost more than you can afford. Very, very important concept. One that most traders never manage to get a hold of before they blow themselves up. Well, their contracts, sorry. Their accounts, I mean. Here is the crude oil now on the Eagle, and you can see still going pretty sideways, no real trend just yet, although Trade Forecaster says we are in trend mode, for about another half an hour. So we might see the market advance a little bit more here. Now, normally in trend mode, we get something like this, right? But not always. Trend mode tells you that the pullbacks are going to be less severe. The market should make some progression, of course, but very often the pullbacks are going to be smaller. The follow through will be better. So knowing that the market is in trend mode, you could probably extend your profit targets a little bit. You could probably run a slightly tighter stop. And then, of course, the exact opposite would be if the market was in scalp mode, you know the follow through will be less. So you're probably going to go all in, all out on target. Maybe bring your target in a little bit tighter and perhaps leave your stops a little bit looser so you don't get caught in the choppiness. Jim's watching the YM, and he said that the Raptor cloud is up to 44 ticks. So we may be due for a reversal here, the cloud getting a little overextended. Sorry, just double checking my cloud settings. The Raptor a little bit more customizable than the other tools. The other birds, the programming is pretty much locked on them. And there's not too much that you can change with it. But the Raptor, you've got some options there you can play with. So crude oil likely to continue moving sideways within that channel until inventory report is released. And let's see, while I was showing you all that, it looks like we had a trend change here on the Hawk. First macro cross technically up here. We started with a macro pullback signal. Macro pullback signal, pretty easy to identify. It's when everything stays in sync. So we have green bars, green trend lines, green filter. But the trend line, the micro line, goes out of sync. That's our macro pullback. Normally a pretty high probability signal, although it looks like this one may have come up a little bit short. So if we traded like that, oh, look at that. Couple ticks short, but far enough along that they would have hit our break-even trigger. So if you're running your break-even, we would have been stopped at break-even. Okay, so it looks like we might be working on a little bit of a trend change now, and perhaps a first micro-macro cross lower. So we're going to keep a lookout for that. Oh, we already got the trend change signal here in the Falcon. Trend change signal occurred right there. We do get a chance here now for a second push on this entry. So all that means is I let the signal engage and I look for the renewed momentum to bring me in. Unfortunately, I'm giving up about 4 or 5 ticks to gain that entry, but we'll see. I suspect we'll be all right here. Now you can see we're going to get some grief here from the secondary resistance line. That's that green line right here. And we are starting to generate some double dots, some double green dots, so that also looking a little bit bullish. Here's that first micro macro cross now. Okay, so we've got a couple of signals. We're into the hard edge of the eagle and the raptor, and normally that means that there's going to be a bounce. That hard edge, we almost always anticipate a reaction there. Okay, so we'll scrub the falcon order and we'll readjust this now for our macro pullback. Oh, and now we're into yellow bars. Oh, and now we're coming back with a green bar sell. Oh, no, still yellow bars. Almost had a green bar sell there, but the yellow bars are putting the nicks on the trade. Oh, here we go. Here's a green bar sell. So, no, not yet. Okay, getting a little bit ahead of myself. The green bar sell tends to occur at the end of a trend. It's kind of like a Hail Mary type trade. Oh, here we go. So it's a Hail Mary on the part of the sellers. We're getting green bars, but no, we're generating a red sell signal. We've got red warning dot. We're going to wait for the triangle and the hash mark. And now we are now we may have moved too far. All right. Well, they're just chopping around a little bit, so not to worry, we will get a signal. We're getting a little bit of a hard edge bounce here now. We're still against the ATR, and again, this means giving up a little bit more of our entry, but it looks like we might generate a signal near the top end of this trading range. We may end up seeing 43.50 after all. So this bar right here flipped the ATR over. It essentially now becomes our signal bar, even though the signal printed over here. We have been using the ATR as a filter, and we'll see whether or not they can press through that now. Good question here from Mary. Mary asks, do you need all these systems to trade the futures, or is one sufficient of all the charts traded? Well, I've got everything here because I want to be able to trade every type of environment that the market is giving us. Remember, these are all designed to pick up different market environments. Like now we're getting a scalp signal. Also, we got a trend change signal. Oh, I'm going to be a little bit too late on that. Maybe I can take it right above there. So I guess what I'm saying is if all you want to do is concentrate on scalping, then you probably only need the hawk. If all you want to do is trend trade, then all you need is the eagle. You know how normally you may have a signal that works great one day and then you go back the next day and it doesn't work at all? What's changed? Your signal hasn't changed, right? It's the exact same signal you've been using, but it stopped working. Well, it stopped working because the market environment has changed. but you're still trying to apply the same signal to a different environment. It's like my grandfather used to say, if the only tool you have is a hammer, you tend to see every problem as a nail. Well, here you've got three different hammers. Right? You've got a hammer for when it's scalping, you've got a hammer for when it's swinging, you got a hammer for when it's trending. And it's not that these are, like a crude approximation would be to look at, say, a 5-minute chart to scalp and a 30-minute chart to swing trade and maybe a daily or hourly chart to trend trade. That's a crude approximation. These have actually all been programmed to pick up certain specific characteristics that occur when the market is scalping, when the market is swing trading, when the market is trend trading. Now, having said that, the Raptor is a blend of the other three tools. So it incorporates elements of the Hawk, it incorporates elements of the Falcon, and elements of the Eagle into one trading tool. In that end, the Raptor is a lot like a hybrid car. Is a hybrid car a pickup truck? No. Is a hybrid car a Corvette? No. A hybrid car is a blending of, the best attributes of an electric car along with a gas-powered car. Will a hybrid car get you from A to B? Absolutely. Will a pickup truck get you from A to B? Absolutely. Will a Corvette get you from A to B? Absolutely. But they get you from A to B in a different fashion. Again, a rough example, but with the Raptor, and the Raptor's a very popular trading tool, and I don't mean to make it sound like it's not as powerful as the other tools, but you're going to not necessarily pick up all the scalp signals. Neither will you necessarily pick up all the trend signals or all the swing signals. It's a hybrid, right? It incorporates those elements. It still generates signals, but that doesn't necessarily mean you're going to capture all of them. Like here, I was just watching here, we had a cloud crossover, so we generated a signal there. That tends to be a pretty high probability signal. I'm a little bit leery here. We're kind of at the morning highs so far, so we just generated a signal here. I could take a buy signal above the high. If in fact the market chose to break out a little bit higher here. One thing I should mention about the triangle and the hash marks, they are, the hash mark is merely a suggested entry, right? Like right here we had, oh, that was a nice little gap. Right here was the hash mark, but if I chose to enter above there because I see resistance there, well then that's perfectly fine. Actually got a little positive slippage on that one. And I suppose I should enable a stop strategy here also. That would be a good idea, wouldn't it, Eric? So we'll start with the ATR. There we go, we got our stop. In fact, I might go with the swing high low. Where's that going to put me? No, I don't want my stop at the hard edge. I want my stop back a little bit to at least ride out this first swing. So what I've done is I've disabled my stops momentarily, or the rolling, the automation of my stops. I still have my active stop right down here. And I did not set my profit target correctly. Let me move my profit target here. Normally I run a 20 tick target, so we'll have that ready for the next trade. And I've got my break-even trigger in play. So we've just encountered the hard edge again. Hopefully we'll get a little bit of a bounce out of that. Okay, it's still floundering. Oh, we just took a little bit of a hit here on the, look at that, nailed that secondary resistance line right on the number. Roll that just to the same level here as my eagle stop. I didn't like the fact that we got filled on that little gap. That was this spike right here that's just about to go through the system. That was when all of a sudden all the buy orders disappeared and boom, the market just snapped up. We did get a positive slippage, but that's going to be small consolation in the event of a reversal. Good question. Mary's asking about the break-even feature. Does it give you any ticks or just a break-even trade? You can set it right here. Currently, I have it set at break-even plus 1 tick, but you can set as many as you want, or you can even set negative ticks. So if you wanted to hit the break-even trigger and say go break-even minus 1 or 2 ticks or 3 ticks, or 0, right, if you want to break even right on the number. But I've currently got a break even plus 1, help cover some commissions. Got to keep the broker happy. So not the strongest of setups. With the Raptor, your stronger setups are going to come here out of the hard edge. We typically look for a hard edge bounce with the Raptor. No, now we're starting to generate red bars and a possible trend change. This is not looking all that promising at the moment. Come on, buyers, where'd you go? Yeah, they're going to tap me here, and then they're going to reverse and head higher. Just watch this. Here, don't do this at home. Oh, they got me before I could move my stop. I was going to roll my stop just a little bit further out of the way. First micro macro cross here to the downside. The nice thing about the Hawk Scalper, of course, is because you're scalping, you can set your profit targets, excuse me, to be anything you want. Currently, we're going with the high probability profit targets, and normally with the scalper, I'm all in, all out, especially lately, the way the market's been. So you can see there we would have managed to find our high probability target. The first micro macro cross, I've mentioned this before, this signal right here. The signal that occurs after the micro and macro lines cross, everything is in sync. Very high probability signal. In fact, you could probably make a living trading that signal alone. So here's one that worked out. Here's another one. Now this one gave you a little bit of heat, but I do believe they found their profit objective also. This is why I'm a big proponent for not crowding your trade also. When this trade was setting up, you didn't have a lot of structure to it. Ideally, down here would be the ideal stop. Barring that, you'd want to go to the crest or the bend in the macro line. And you'll see why here in a second, in case the market peels against you a little bit. Oh, and they just tagged the target there after humming and hawing for a little while. This first micro macro cross didn't engage. This first micro macro cross here, there's another profitable one. Here's another first micro macro cross, easily found its profit target. Nope, that's a green bar sell. Here's a first micro macro cross that failed. Now this is not something you're going to hear any other room moderator admit to. Let's see, did it hit the break-even trigger? No, it may have come up short of the break-even target also. But it did give you an opportunity to adjust your stops somewhere through here before eventually turning around. So hopefully once you saw the market start to advance a little bit, you would have gotten a little bit more aggressive with your stops and not waited for the market to stop you out on the whole amount. Here's another first micro macro cross. This one came a little bit late. See, the crossover occurred over here, but all these yellow bars spoiled the signal. We want the first one that's in sync, very high probability. Here's another first micro macro cross signal. So you can see what I mean. If you took these trades and you were able to trade 2 or 3 or 4 contracts every time, that's $100 or $150 or $200 in profit per trade. And that's just today. What have we had? 3 or 4 trades already? In the demo room here, sometimes we miss some of these opportunities because I'm showing you stuff, but the principle remains the same. Yeah, I like Tony's comment here. Tony mentions about having all 3 birds. He says, to Mary, regarding your question, if you need all 3 birds, in my opinion, one real advantage to having all 3 is that you can see the trade opportunities where all 3 birds are in sync. This is a really strong sign that you are on the right side of the trade. This is what kind of the problem we've been having this morning. You see how our hawk is bearish, our falcon is bearish, the eagle is still bullish. We're actually generating a red bar buy signal out of the eagle. This is why I wanted to sneak my stop just a little bit lower, because I knew these scoundrels were going to reverse and head higher. My stop was just a little bit too tight. So what Tony is saying is when all the systems are in sync, it's easier to take a trade. Like right now, we're getting conflicting signals or conflicting environments. The eagle, sure, the eagle is bullish, and we've just generated a red bar buy. But the hawk is bearish. Mind you, it has moved into yellow bars, which is neutral. The falcon is bearish, although we are just starting to crest on the trend line. It's just starting to turn green. And the raptor, the cloud went bearish, and now it's starting to turn over and try to get bullish again. So kind of a funny day. Come on, get up there. So here on the Hawk, we're generating a green bar sell. We should see a little bit of a test of the extreme here. This is actually a signal that produces a counter trend trade for us also. It's one of our few counter trend signals that we have. This is a signal that you can sell with the market, or you can take the counter trend of that signal. And now you can see it's starting to work on a first micro macro crossover. We're getting the red warning dot, or pardon me, the green warning dot. The micro line and macro line just into sync. We haven't generated the buy signal just yet though. So you could actually tighten the parameters somewhat if you chose. The hash mark's going to print right here, but for 1, 2, 3 ticks, you can take it above the high. So that's a judgment call. Oh, Mary, you are loaded with good questions. Hold on, let me just throw this in. And what I need to do too is I haven't shown you guys how the stops roll. Okay, let me get a stop strategy going here so that you can see how the system rolls the stops automatically. And what I'll do is if this gets up a little bit, I'll go with a more aggressive stop strategy to so that you can see how it automatically begins rolling the stops for you. Okay, great question here from Mary. Mary asks, do you know the probability win rate of these systems, or is it just a day-to-day system? And how do you handle a loser? Do you double up on the next trade? What is the strategy? Okay, fantastic question. Very deep question. And these are usually the types of questions I get my soapbox out and go crazy for a half an hour, so bear with me. And somebody remind me when we get a little closer to crude inventory, I think we've got a pretty decent range that we can bracket today. Okay, first off, do I know the probability win ratios of the system? Yes, the probabilities of the signals are pretty much set. For instance, the first micro macro cross signal here on the Hawk that we're taking has a better than 80% win ratio. The macro pullback signal will be a little bit less. The 4-arrow consolidation signal is also like the macro pullback around 70-75% win ratios. The tools themselves, I had a Falcon owner tell me that his Falcon signals were producing 83.3% win ratios on the NASDAQ and the mini Dow, which would, correspond to the E-mini S&P also. Normally, if you stay with the high probability signals, and let me show you this, we go over the high probability signals every day in the trading room. And we also have what we call a cheat sheet. This is the Hawk cheat sheet because I developed it for the Hawk because for whatever reason people were having most difficulty with the Hawk to start. But you have the 5 basic signals that you're looking for when you're trading your Hawk scalpers. So namely, you have your first micro macro cross, your macro pullback, your 4-arrow consolidation, your post 4-arrow consolidation, and your red bar buy or green bar sell. you'll notice there's many more signals that develop through here, but they don't really meet the criteria of the signals we're looking for. So we don't necessarily just trade every single signal. There's certain signals that we like to hold out for, namely these, and these are your higher probability signals. You can see each one had very good follow through, and they're pretty easy to identify. The same thing for your Falcon, same thing for your Eagle, same thing for your Raptor. You're going to have high probability signals that you're going to try to concentrate on. Now, Mary asks, is it just a day-to-day system? Well, some days are going to perform better than others, and I think that's true across the board. You can see today we're struggling a little bit to try to get a little bit of a trend. As a trading room moderator and demonstrator of the software, I have to show you how this stuff works. In the trading room, I try to give people my best opinion. So if you're a member in the trading room, I don't normally just show you these trades to show you how the software works. We normally, well, we'll go a half an hour without taking a trade, just because the parameters aren't right. The setup isn't as solid as we would like. So you got to give me a little bit of license here today, because I'm trying to demonstrate the software as well as, well, if we see anything really juicy here, I'll be sure to point it out to you. But I really like your next part of your question. How do you handle a loser? Do you double up on your next trade? What is the strategy? Okay, there's two components to this. I'm going to deal with the money management aspect first, because I believe that to be the most important part. I believe this is where a lot of traders drop the ball. And, well, I'm going to end up having to cancel this trade to demonstrate, but that doesn't matter. What most traders do wrong is they end up risking more money than they can afford on the trade. What most traders do is they say, oh, okay, well, I'm a small account trader. I will only trade 3 contracts. And I've only got $10,000. I'll only trade 3 contracts. And so what they do is they trade 3 contracts, and they say, oh, okay, here's a red bar buy signal about to print. It hasn't printed yet, but we're pretending now. And everybody tells me I need to have a 3-to-1 risk reward. So they go like this. They say, okay, I'll enter here. I'll put my stop down here, and this will be my profit target. And they'll say, oh, well, that's not 3-to-1, so I can't take this trade. And what ends up happening is, if they get into the trade at all, and the market goes against them, they may not have been able to afford to lose this $200. Or if they nix the trade because they couldn't get a 3-to-1 risk-reward ratio, what happens? Boom, the market takes off like a shot, right? And by then it's too late, and you're sitting around wringing your hands saying, why in the world did I not take that trade? Well, you took that trade because, or you didn't take that trade because your reasoning was wrong, first of all, and you may not have been able to afford to take that trade, or you may have manufactured a trade. Let's do it like this. You may start looking at your profit objective, saying, okay, my profit objective is there, so that means I have to put my stop loss right here and right there, and that way I can get at least a 2-to-1 or almost a 3-to-1 risk reward, or reward to risk. And then what happens is the market brings you in, and then oh goody, and oh no, and all of a sudden you're stopped out. Okay. What the trade manager does for you is it always controls your risk. So if you're looking at this trade and you say, all right, I'll take the trade here. And where should I risk the trade? Well, if I risk the trade right here, oh, excuse me, let me automate the targets. If I risk the trade right here, Trade Manager says I can afford $300. That's 2% of my trading capital. So even if this trade goes sideways on me and I lose the $300, it is not an amount I could have not, it is an amount I can afford to lose. But that's awfully tight, right? I'm kind of strangling the trade this way. So what if I place my stop down here? Oh, Trade Manager says, oh, you can afford to risk $300. So my risk amount never changes. What if I choose to risk the trade all the way down here? Okay, well, we're kind of on the cusp. What if I choose to risk my trade all the way down here? You got to forgive the rounding error. Trade Manager says, oh, you're still able to risk about $300. But did you notice what changed? What changed was the quantity. So what most people end up doing is they lock in their quantity and they say, oh, I'm always going to trade 3 contracts. And they end up taking a trade like this and the market stops them out. And so then they say, oh, okay, well, next time I better leave my stops a little bit wider. So, okay, now they're risking $300. Oh, okay, so they lost that. Oh, okay, stops are still too tight. So next trade, they risk way down here and they get stopped out. But look at what happened. All of a sudden, they've lost $600. And if you're trading a $10,000 account, that's 6% of your trading capital. Now you're starting to get into some pretty dangerous territory. If you're, generally speaking, if you're risking 5% or less of your trading capital, you're doing okay. Ideally, 2% tends to be the norm or considered the ideal. But what most people do is they end up risking far more than they can afford. So what the Trade Manager does is it always controls your risk for you. So you can risk a trade all the way down here. It automatically sets your position for you. So not only are you controlling your risk exposure, but you're also, in most cases, maximizing your profit. Now, this is not a good example because I've only got the one contract. But let's say I chose to risk it right here. Trade Manager says, okay, you can afford to take 3 contracts. What does the average trader do? The average trader will start, say, with 3 contracts, and let's say he takes a loser on his first one. And then he'll take a loser on his second one. And then he says, oh, shoot, I'm getting creamed here today. So he lost on the first 3 contracts, lost on the second 3 contract trade. So he says, oh, I better scale back my exposure. So now he takes on a single. And what happens? The market puts in the rally of the day, and he's only trading a single contract, right? So if you manage to control your risk properly, you'll also maximize your profitability so that when you do hit those winning trades, you maximize your winners while minimizing your losers. Now, not minimizing in the dollar sense, but minimizing in the risk sense. And this is, if you've never heard this before, it's going to be a little bit of a foreign concept. And I'm going to show you a tool here in a moment. Oh, and a crude inventory coming out here in a moment. Oh dear. Oh shoot, I think they're just going to bolt on me. Thanks, Mark. I'm going to show you the OCO function here before I get back to my little rant. So the OCO function, and I'm just kind of eyeballing it today. Normally what we do with the OCO is if the market has made a nice little range through the day and is trading somewhere in the middle of the range, we'll use the OCO function, there we go, to buy above the high and sell below the low of the range and pretty much just let the market bring us in. All right, so I've got my break-even trigger. I guess I'd better enable a stop. Okay, crude. Darn it. I want to nix that break-even trigger, but I didn't get a chance. I gotta really get to show you here. We're going to sell the market just so that you can see how the trade manager rolls the stops for you. And now once we hit the break-even trigger, you're going to see it take it from here and snap it down to where our entry is. But even here, even just selling the market like this, the trade manager still, well, yeah, I'm just going in with a single so I don't overexpose myself. But that's very important. You never want to overexpose yourself into a trade. Okay, so now Mary says, well, what happens when you take a loser? Because, hey, you know, we're trading. We will take losers. It's a fact of trading. Oh, working on a late filter entry signal here, folks, by the way. So what do you do when you take a loser? Well, first off, you have to contain your risk exposure, right? So you don't want to lose more than you can afford. There's a certain amount of freedom knowing that, okay, here's a trend change signal on the Falcon. There's a certain amount of freedom knowing that if I take this signal and I risk it like that, and the signal reverses and stops me out, I have lost an amount I can afford. So that actually enables me to leave a decent stop instead of, you know, hovering my stop above the market here, scared to death that it's going to reverse and stop me out. Right? All you end up doing by running an overly tight stop is strangling your trade. Just a real quick story. Some of you will have heard this already. I get a call from a fellow who I was coaching, and he says, Eric, I just lost, I forget what it was, I think $600 or $800 today trading gold. And I said, how could you lose $600? I just made $1,000. So here we're trading the exact same market. He loses $600. I made $1,000. Well, the problem was he was strangling his trades, right? He ran his stops so tight that the slightest little hiccup he got stopped out on. And that's not what you want to do. You want to give your trade, at least at the beginning, give your trade a little bit of room. If the market's going to reverse, okay, the sellers pushed the market down here. They pushed the market again down here. They gave it a little bit of a push here. If the buyers choose to push the market up, do you really think the sellers are going to walk away without at least one more push lower? Sure, it's possible, but unlikely. So if the buyers rally the market up, chances are pretty good we're going to see a little bit of a swing point in here somewhere, and then we can start bringing our stops in, maybe go with a more aggressive strategy like parabolics or bar high low, which will keep our stops in a little bit tighter. In fact, we'll just let this one go, and I'll attempt to show you exactly that. So when you take a losing trade, first off, you want to make sure that you don't lose more than you can afford. Secondly, I don't believe in doubling on the next position. I know people who do it, and I understand the logic behind it. I'm not totally opposed to it, but of course, doubling means that you're going to double your risk exposure. So that means you're going to be going from 2% to 4%, which is still acceptable. But if that trade goes sideways, well, now all of a sudden you're in a little bit of a stink hole. What I recommend is that you have a trade quota and you have a pain threshold. My pain threshold is 5% of my trading capital. If I blow up 5% on a trading day, I say, okay, something's going on here today. I'm not reading the charts right, or I'm over trading, or I'm doing something wrong, and I've lost 5% of my capital. I'm going to call it a day, because I know that I can recover that 5% in the next day or maybe 2 days. So it's not the end of the world. I have met people who have blown up a $20,000 trading account in a single day. And not one person. I have met 2 people who have blown up a $20,000 account I think one was actually 25,000. How in the world do you blow up a $20,000 account in a single session? And that just boggles my mind. If I'm down $1,000 on a day, that's it. That's my pain threshold. See you later. So I think that's an important strategy to have. I think you should also have a trading quota. I'm a big proponent of a trading quota. A trading quota is the best way I know to keep yourself from overtrading. 99.99% of the people who come to me for coaching are overtraders. That is the very first problem that we have to deal with, is they're overtrading. And normally I have a very small trade quota. I will have a trade quota of 2 or maybe 3 trades a day. I tell people, take a coin, flip it, see how many times you can flip heads in a row. That's how many times you should trade in a day. So for most people, they can usually flip heads 2 or 3 times in a row before it comes up tails. Sometimes you can flip heads 6 times in a row. Sometimes you can't flip heads for 5 or 6 tosses. Trading is kind of similar in that respect. You know, every trade, the market's either going to go up or the market's going to go down. So in that sense, it's a 50-50 proposition, very much like a coin toss. But what most people do is they overtrade. They take far too many signals in the day. And that's not the key to making more money. You see, we all have this regular production line type mentality, but that it doesn't apply to the trading world. In the non-trading world, we all have the mindset, and I'm just waiting for this to rally up a little bit so I can show you how I would adjust my stops, and then just let my stop strategy take the trade along. In the regular production world, the harder we work, the more widgets we produce, the more money we make. But that doesn't apply in the trading world. In the trading world, the more trades you take, the less money you may actually make. Because trading is very much a game of probabilities. Right? You need to be right. You don't need to do more. You need to be right. And there's a big difference between that. You need to be right to the point where you can maximize your position size. Case in point, if you're trading for just $50 a trade, $50, that's it. That's your profit target. I don't care whether it's the E-mini or the Russell or crude oil or gold or the NASDAQ or soybeans or any other market you can trade. If you trade for just $50 a contract and you do that twice a day, you nail 2 $50 winners. Did you know that if you do that every day and you traded 25 contracts, you would make $500,000 a year? $500,000 on 2 $50 trades. Now, I can hear you saying, well, that's great, Eric, but I can't afford to trade 25 contracts. All right, what if you traded 5? That's still $100,000 a year. That's not exactly chump change. What if, okay, you can't trade 5. What if you traded 3? Oh, now all of a sudden, that's $60,000 a year. I know a lot of people working a lot harder than that to earn 60 grand. And sorry, I wasn't able to show you the swing. I was expecting it to get a little higher, but obviously there's the swing. So now let's go into the parabolics, which are a little bit more aggressive. And I'm going to nix the profit target so that hopefully we can see how the parabolics are going to manage the trade. There we go. What if you traded 2 contracts? That's an extra $40,000 a year on just two $50 trades with two contracts. I bet you everybody who is in the room this morning could pull that off. And for those of you really trading small accounts, if you traded just a single contract, that would be an additional $20,000 a year on two $50 trades a day. Just two trades a day. Never mind, like this one guy came to me once for mentoring. He wanted to be a scalper. He wanted me to show him how to take 100 trades a day. Because in his mind, scalpers take 100 trades a day. I said, you will never be a successful trader taking 100 trades a day. He never came back. Because that's not what he wanted to hear. But it's a well-hidden secret that is what makes a successful trader, is not trading more, rather finding a high probability signal, leveraging yourself correctly, do that 2 or 3 times a day, take your money, finish in the black. That's the other part of the trade quota idea. So if I have a trade quota of, say, 3 trades a day, 3 trades a day plus I want to finish in the black, plus I have my pain threshold, you're going to be pretty hard pressed to do wrong. So let's say I take my first trade and I lose $300. Because as you've seen, that's kind of my risk exposure. Okay, so I lose $300. Next trade's a winner, and let's say I make $150 on it. So I'm still, let's say $200, so the numbers don't get confusing. So I'm still $100 in the hole. Let's say I take another trade, my third trade on the day, and let's say I make break even. So I've taken my three trades for the day, but I'm still in the red. I'm still $100 in the red. So I need to take a fourth trade. Let's say I take a fourth trade and I make $200 on it. So now I'm $100 to the good. I've met my three trade quota, and I've got money in the black. I stop trading. Now, I know you're thinking, well, Eric, it's only $100. Yeah, but normally what happens is I go 3 for 3. So if I have a losing trade in there somewhere, that's usually because something's not right. So if I go 3 for 3, and let's say I make $200 per trade, just as a rough figure, then I've made $600 on the day. If I want to make more, I don't take a fourth trade or a fifth trade. I add another contract to my position. You know, maybe instead of 2% risk, I'll go 3% risk. So now I'm making $300 per trade or $350 per trade. And then on those 3 trades, I'll have $900 to anywhere to $1,050. Right? That's how you make more money. Yeah, it's like Jim says, there's no reason you can't make $200 to $400 a day if you have a trading plan. And don't overtrade. It's hugely important. So you can see, you know, there was a decent signal, a late filter entry signal, which is one of our high probability signals. See, the filter went out of sync. Trend line did not go out of sync. Had to sit on it for a little bit, but a nice little progression lower. And it looks like they're still going. I'll introduce you here to this last tool. And you guys can play with this on your own. Let me see if I can find it. And those of you who have been in the room with me before have seen this. It's the Money Expert from Indicator Warehouse. And yes, Ishmael, we're going to look at a crude oil chart here in just a moment. You guys can play with this. This is Joe. Joe is a small trader. He's starting with $10,000. And he's only trading single contracts because he wants to be a safe trader, right? He doesn't want to blow up his account. So he takes the 10 grand and he runs it up to 13,500. Fantastic. Good job, Joe. But what if he had used position sizing? He could have taken that same $10,000 and instead of earning 13,500, he would have actually earned $22,000. Now I know, like Mary was asking, what are the probability win ratios? This is going to blow your mind, Mary. If you haven't heard this before, Joe was only right 50% of the time. What? Yeah, that's right. You don't need to be right a lot of the time. In fact, one of my most profitable months ever, I was running a 45% win ratio on the trade. But my risk was always controlled. See, this is the key right here, controlling your risk to 2%. Now, this tool allows you to play with this a little bit, but here, let's do an example. So here you can see Joe is the blue line, you're the green line. Joe is only trading a single contract, you're position sizing. Joe starts with 10,000, finishes at 12. You start with 10,000, you finish at 15.5. This is actually very realistic, the way this curve worked out. Notice that early on, you were taking more losers. Well, I shouldn't say more losers. The way this works is when Joe wins, you win. When Joe loses, you lose. But your losses amounted to a little bit more because you were probably trading 2 contracts, maybe 3 contracts, whatever your risk allowed. But look at what happens when you hit the winner. Sure, Joe is making some progress here, but look at how much more progress we make. Now, again, we hit a bit of a losing skid here, and again, this is very realistic because this tends to happen to us, right? We have a winning streak, we have a losing streak. So our drawdown was a little bit more severe than Joe's, but once again, look at what happens when we start winning. Now, if you click on the chart, you can see how these trades amounted. And one thing that's going to strike you is that there's no home run trades here. There's no trades for like $1,000 winners. In fact, the programmer did that on purpose. Here's the biggest winner right here, 400 bucks. So Joe makes $400. We took 3 contracts. We made $1,200 on that same trade. Well, here happened to be another $400. Now these trades are all randomly generated. There's no rhyme or reason to this. The computer just spits out a winner or a loser, but half the time it will be a winner. The other half of the time it will be a loser. So you see let's see what the biggest loser was. Here's a $175 loser. Usually there should, oh, here we go. I was going to say there had to be a couple $200 losers in there. So Joe lost 200 bucks. Yeah, we lost $600 each time because we took 2 contracts. So we lost a little bit more, but again, we did not lose more than what we could afford. Let's try this again. What if you're running 40% win ratio? Now this is really going to skew the numbers. All right, so very choppy. See, Joe wins a little, loses a little, wins a little, loses a little. Joe very, very choppy all over the board. But even at the end of the day, Joe's pretty much even. He goes from 10,000 to 10,200. We go from 10,000 to about 9,500, it looks like. So we've lost about $500. And we're only right 40% of the time. What if we're right 45% of the time? Okay, well, this one, mathematically, it's feasible. Joe hit a winning streak here, and you can see how our winners amounted dramatically. So Joe goes from 10,000 to about 15,000. We go from 10,000 to 40,000. We'll try that again. Okay, we're dead even with Joe on this one. There was no advantage to being to our position sizing. Again, dead even. This one's kind of interesting. So Joe goes from 10,000 to about 13,000. Looks like, and this is a very important thing to note, we're about 80 trades in without any real signs of progress. So over the course of 100 trades, this is probably in the neighborhood of a month, maybe 6 weeks worth of trading. Now, how many people have the fortitude to stick with a system that doesn't seem to be producing anything for over a month or 6 weeks? Probably not too many. I meet people who ditch their trading system after a week if it isn't profitable. And then they strap on Bollinger Bands or stochastics or whatever. Somebody gives them these mystical settings for MACD, and all of a sudden they think they found the Holy Grail, and that's not it at all. Every time you change something on your trading system, you're essentially starting over. You're starting from square one. But had you stayed with it the last 2 weeks or 3 weeks of the month, all of a sudden, when you hit a string of winners, Joe, like I said, went from about 10,000 to 12,000. You went from 10,000 to 19,000. That's the power of position sizing. So yeah, you may hit a string of losers. You may take a little bit of a dip, but so long as you don't blow yourself up, so long as you maintain your risk exposure, you can make money on a 45 or 50% win system. Look at this one. This one's very realistic also. You know, Joe took some losers. Okay, we took some losers, and look, we took some serious losers. We got down here to about $6,500. We drained about $3,500 of our trading capital. But again, the position sizing, we never risked more than we could afford. And then when we started to get some traction, okay, Joe finished with 12,000. Once again, we finished with 19,000. Yeah, regardless of what you can start with, the principle remains the same. Now, if you're starting really small, you're going to be pretty much trading singles, and there's nothing wrong with that. When you're starting small, your first objective should be to build your trading capital. So that means you go all in, all out, on target, just hit those winners, find a high probability signal. If you're trading the hawk, that means you hold out for the first micro macro crossover, and that's all you do. Right? So here's the first micro macro crossover. You take your trade. Let's say you take it right on the hash mark. But don't strangle the trade. Don't cover it here. Give the trade a chance. Even if you're trading a really small account, that is a feasible stop for you. The market peels against you a little bit, comes down, hit your profit target. Okay, it's only 50 bucks. But what did I say? You do that twice a day. Over the course of the year, you've made $20,000. So even if you only start with $5,000 or $10,000, now all of a sudden you're trading a $25,000 or $30,000 account. Okay, that's something that you can do something with, right? And you can't beat yourself up when the market does one of these things, because you're not, if we knew the market was going to do that, of course we wouldn't take in profit on target. But there's no way to know that sort of stuff. So I know I kind of get on that bandwagon, but it's so important. I see people doing it wrong all the time. They hear things about risk-reward ratios. They hear things about, you know, high probability systems, and they think that's the answer. No, no, no. A high probability signal is important, yes, but it's not the be-all, end-all. It's only part of the equation. It's like a stool, right? You need to have 3 legs for your stool to stand up. You need to have an entry signal. That's 1 leg. You need to have a way to manage your trade. That's leg number 2. And you need money management. That's leg number 3. You can't stand on any one of the legs. You need all 3. I like that analogy. I'm going to keep that one. Ishmael was asking for a crude oil chart. Absolutely, Ishmael. Let's bring this over here. Mary's asking, what's the max tick per trade you have ever taken in the live trade room? I don't know what one of my biggest runners have been. Usually I'm all in, all out on target. But that suits my personality, right? That if you're the kind of person who, takes the first micro macro cross like this and you get all in, all out with target, and then all of a sudden the market does one of those and you get all bent out of shape, well, then you're the kind of person who needs to trail a stop. This does not bother me. Because I'm the kind of guy where I'm very much a bird in the hand kind of guy. I'll take the open profit. Oh, I'll share one more very interesting story with you. A few months back, I had the opportunity to meet a fellow day trader. And I didn't know this person was a trader. I just happened to be in their house, and beautiful property on the ocean here on Vancouver Island. Just a gorgeous piece of land. And I noticed the computer setup and such. I asked them what they did for a living, and they were a little bashful about it. And they said, well, I day trade. I said, oh, really? And of course, as day traders, you start talking strategies and such. And you know what this person's entry strategy was? And no, I am not joking. This person traded by feeling. Yes, you heard me correct. This person traded by how they felt. So they would look at the chart, and if they felt the market would go higher, they would buy it. If they felt the market would go lower, they would sell it. I said, oh, really? And they said, yes, that's how they trade. Now, before you think this person is some sort of quack, you should know that they were doing a major renovation on their house, easily to the tune of $100,000, maybe more, and they were paying cash for it. They didn't take a bank loan. They had a nice brand new what's that big Lincoln Navigator in the driveway. He said he got a very good deal on it. I'm sure he did. Paid cash. So this person is not as flaky as he sounds, but obviously I was intrigued. How do you trade by feeling? Well, it wasn't that this person had some sort of extraordinary gift of feeling out the market. Rather, this person's money management skills were second to none. I have never, ever seen a person manage a trade so well in my life. And this person took on clients as well. And he always asks his clients this question. If we're in a trade and we're up $50, do you want me to take the $50? Or if there's a chance we can get $200, do you want me to hold out for the $200? Now, you guys have already heard me talk. You probably know where this is going. But almost everybody will say, no, hold out for the 200. Guess what? Wrong answer. You take the $50. So if this person thinks it's okay to take a $50 profit and he's happy with it, why in the world would you not take a $50 profit? I like to call it the sidewalk test. In all honesty, if you're walking down the street and you see a $50 bill laying on the sidewalk, are you going to stop and pick it up? Chances are pretty good, I'm going to say almost all of you are going to say yes to that. Well, if the market's showing you a $50 bill laying on the street, why would you not stop to pick it up? Because you think it's going to turn into a $100 bill or a $200 bill or a $500 bill, which it very well might. But hey, $50 in the bank is better than a $200 kick in the head because the market turned and stopped you out. This person, I think at the time I was talking to him, didn't have a loss, didn't have a losing trade for 2 months. Imagine that. How many $50 winners over the course of 2 months, how that would add up. Pretty good, I think. Okay, let's just go over crude here really quick, and then I'm going to get to Ron's question. So here's crude oil on the hawk. We just flashed a first micro macro cross here, but the market's still pretty much sideways for the most part. Not a whole lot of stuff going on. You can see we're back into yellow bars. That's the first signal that the market's going to start going sideways here on the hawk. That's on our scalper. Here is now the Falcon swing trader. And you can see we're waffling also. Trend line starting to look a little bit like a roller coaster. Filter starting to break up quite a bit. Again, that's a clue that we're in a little bit of a sideways drift, which seems to be crude oil's modus operandi of late. Here the eagle is actually the only one actually producing a signal. We're getting a green bar sell off of the hard edge. So the eagle on crude oil actually looking a little bit on the bearish side. And we do have an opportunity for a second push on this entry, but there's the problem with trading crude oil, is it's just a little bit out of reach. At least for me on the eagle, unless I dial up the risk amount. Right, unless I trade, say, 3%. I could probably take it at 3%. There you go. So, feasible trade. You certainly don't want to put your stops any tighter than that. The DTS system is very good at picking up market momentum, but even so, there are going to be periods where the market may try to chop around a little bit. Ron is asking, can you set the signals to only show the high probability trades? Well, they're not that difficult to identify. You've already seen the cheat sheet for the hawk. Most of you could probably already show me a first micro macro cross signal or a macro pullback signal. There's a macro pullback, which also happened to be a 4-arrow consolidation. 1, 2, 3, 4. 4-arrow consolidation, as the name suggests, happens when the market starts drifting sideways. Macro pullback, when the trend line goes, the micro trend line goes out of sync, everything else stays in sync. Here's a green bar sell, right? They're not difficult to identify. And we go over them every day in the trading room. Late filter entry signal on the Falcon. Trend line does not change color. Trend line goes out, or filter goes out of sync, comes into sync. Very easy to identify. Trend change signal. Trend line changes color. It's essentially the first signal where everything is in sync. So again, very simple to identify. Those are two of the highest probability signals on the Falcon. Here on the Eagle, we have our trend change signal. So it's essentially the first signal after the band changes over. This also happened to be kind of a rule of 3, which is a little bit more complicated signal, but I won't get into it today. Hard edge bounces. Anytime the market encounters the hard edge and comes out with a signal, that's a high probability signal. Let me see if I can find you a red bar buy or a green bar sell. Here we go. Here's a red bar buy from the other day. Market comes down, bars turn red, encounters the hard edge, comes out, produces a buy signal. High probability setup. With the Raptor, we have things like our cloud crossover signal. So the clouds cross over, we produce a signal. The cloud tends to offer some support to that signal. And you can see very good progress out of that type of signal. We also have your standard hard edge bounces. So here the NQ looking like it's poised to head a little bit lower. We do have double pullback signals. Let's see if I can show you a double pullback. Oh, come on, we must have had a double pullback here somewhere. No, it's been a couple days since we had a decent double pullback signal. But that's another higher probability signal that you would get out of the Raptor. Oh, way to go, Jim. Jim says, Eric, he says, today I'm up on 4 trades, 75 points. He says it's not that hard to do. And again, you know, Jim is showing some discipline there, holding out for the better signal, taking some profit when he's got it. And that's pretty much the winning formula right there, folks. All right, I've got to get to an appointment at the top of the hour, so we're going to be closing up the trading room. If anybody has any questions, please type away, and I will be sure to answer your question before we go. I'm just double checking, make sure I haven't missed anyone. No? All right. Okay, you guys, thank you very much for your attendance today. If you are trading this afternoon, I don't know what to tell you. It's been a real mixed bag. You know, the Bulls have had their chance, the Bears have had their chance. I wouldn't be surprised to see another rally. You know that? I wouldn't be surprised to see the market recover maybe back to 43.10. That might be feasible. But yeah, it's one of those days where you gotta just take your time, do a little cherry picking. I think all in, all out is the only way to go today. DTS owners, I will see you in the trading room again tomorrow morning. And we will have another open house session on next Wednesday. So I hope you'll be able to join us then also. All right, you guys, we'll talk to you later. Bye for now.